So we're going to change gears. I'd like to welcome the next panel, which is the differing investment strategies of multi-sector financial ship owners. John Imhoff is going to run this discussion. And for those of us that have been in the business a while, it has been amazing to watch the line between ship owners and investors become a little bit blurrier. We have a new breed of asset managers up here today who are sort of behaving in many ways like traditional ship owners, but they're making investments on behalf of third-party investors. And I think John and all of us would agree this is something that's going to continue to accelerate, particularly as the capital needs expand with decarbonization and fleet renewal. So, guys, thanks for being with us. It's always great to have you. And John, take it away.
Thank you, Matt. I'm John Imhoff. I'm a shareholder at Better Price, which is a law firm based here. I'm here in New York. My focus is on transportation, in particular on maritime transportation. I am really excited about this panel. We have some very distinguished guests here. I'm going to ask each one of them to introduce themselves. We have Paolo Almeida, Ulla Hertighe, and Christoph Toffer from Tufton, SFL, and Borealis. Tell us a little bit about yourselves. Would you spend a couple minutes doing that before we get into the meat of the matter, which I think is what's happening and where do you see the market going? You are multi-sector investors, so you have the ability to go between container ships and tankers and bulk carriers, and I think the audience would be really interested in hearing what things are like now and where you see it going. But first, please introduce yourselves and tell us a little bit about your organizations. Paolo?
Thanks very much, John. Paolo Almeida, Chief Investment Officer of Tufton Investment Management. We'll just go by Tufton for the rest of the session to keep it easy. We are as with my peers here, a shipping-focused investment manager. We have a portfolio of about $1.2 billion in currently just under 70 ships. The portfolio was slightly larger, both in dollar terms and in ship terms last year, but we have both recycled some capital and sold some of the container ship exposure that we have. We manage capital primarily for European pension funds, but we also have a significant listed fund, Tufton Oceanic Assets, which has a market cap of just over 400 million, listed in London. And we, last September, were one of the first 20 significant players in the shipping industry to commit to being net zero by 2050 and to have zero carbon capable vessels in our portfolio before 2030, and that's a key focus area for us over the past year or so and for the next several years.
Ulla, tell us about SFL.
Oh yeah, thank you, and thanks for inviting me here. SFL, which I happen to work for, has a very distinct, different business model than my two colleagues here. We're long-term focused. We're build, own, operate the type of company. We run vessels time charter basis, focus on typically 5 to 15-year time charters, and we buy assets to own. And my impression, looking at your websites respectively, it's more sort of asset play driven, where which is of course a good way and to make money if you hit it right, if you're able to buy low and sell high. Our business model is really more driven off charter counterpart, have visibility in cash flows, and as it happens, there is some money left over. So $2.5 billion so far in dividends over the years. And I would say being the one only, I think, shipping company, at least listed, that's been consistently profitable and paid dividend every single quarter for an extended period.
Yeah, I noticed that. You're quite proud of that, and rightfully so. Christoph, tell us about about Borealis and your business.
Yeah, thanks, John. Thanks for. I'm the late addition to the team here. Christoph Töpfer, CEO of Borealis Maritime. We are a ship management and ship investment firm based in London. What we do is we basically try to match investor interest from institutional investors with opportunities in the maritime space. And we have, over the time, deployed capital in very opportunistic strategies, call it high-risk strategies, around distressed sectors. We also have built up a lending platform, again matching an opportunity in the shipping environment where banks were withdrawing, less debt availability, but also at the same time investor demand to deploy capital into alternative lending structures.
That's Australis, right?
That's Australis Maritime, exactly. So that's another leg of our business. And we try to adapt also with the shipping markets, meaning that there are times where there are opportunistic investment strategies that can play out, where there's also capital that wants to invest into this. But then at the same time, there are also changes in the underlying markets, and where you have to play more for yield rather than asset play. So we also have done and will continue to do investments into more yielding asset play or asset strategies rather than the opportunistic one.
Right. I've noticed looking at what your companies have done over the past year, Tufton and Borealis have both kind of lightened their investments in container ships. Can you tell us a little bit about that? Is that mostly a market allocation play, or is there something else going on there? A lot of people who are collecting container ships and you're selling. Tell us a little bit about that, Paulo.
Well, a stated part of the strategy of at least our listed fund is to reallocate capital between the segments of shipping. We do continue to maintain a fairly diverse portfolio, but we are quite rigorous in establishing both our investment and divestment framework, which is primarily based around valuation of vessels versus depreciated replacement cost. And if you can sell some assets at 2 times depreciated replacement cost and buy others at 75%
right.
with similar yields, and repeat that several times, that's a way to create very attractive returns for investors.
You reinvested in tankers?
We absolutely not in all our funds. In general, yes, but in our listed fund, we absolutely reallocate capital. We've been doing that into handy bulkers, and also over the past 18 months, increasingly into chemical tankers, and product tankers, which are now doing fantastically well.
Right. Christoph, you sold a bunch of container ships this past year, and looked like you reinvested in offshore. Tell us a little bit about your strategy.
Yes. We had a fleet of about 80 vessels under management last year, and of which 50 were container ships. These were investments that we had done 5 to 6, 7 years before, and this was the time to harvest. So we have been selling in the last 15 months about 40 container vessels out of our fleet. And it was a fantastic time. Very happy investors, and this is how the cycle goes. So then we were looking at other opportunities. And we invested, in the last 6 to 9 months, we invested quite a bit into the offshore space, OSVs, offshore supply vessels. So really allocating capital from the container market into another sector that we felt was ripe for change, and so far it's playing out quite nicely.
Yep. Ulla, you mentioned your strategy is quite different from Paulo and Christoph. You are more buy and go long on your vessels. And your strategies, if I understand correctly, is find long-term quality charterers to match up with those investments. Tell us a little bit about that, please.
Oh yeah, I would say it's hard work, because the problem, if you try to be relatively conservative in your assumptions and not too aggressive, typically on residual, you have to be very careful. I mean, we are segment agnostics. And we measure, and we look at volatility, between the segments before we make investments, and then hopefully we make the right calls. If there's one thing, you should be very careful with is sort of the Deal of the Year awards that is given out here. The only one who's really celebrate are the lawyers and the brokers, typically. Everybody else, and particularly if you represent the capital, you really should have to wait to see if you get your effective return on your capital back in the end. That's when you should celebrate. But nobody wants to talk about that.
That might be a long time, because a lot of your vessels are way on backlog.
Exactly.
So some of them out 5, 6 years, if I'm correct.
Yeah, average is longer than that. But again, typically what we see, we typically do longer than 5 normally. That's when you get real sort of leverage. I would say the financial structure, which is more interesting. Maybe also worth mentioning that, our funding base has changed very fundamentally over the years. At the beginning, it was predominantly the Scandi banks and European banks, and now we have much more with Asian banks and very limited actually with the classic Scandis and Europeans. So there's been, we have had a full rotation also in the portfolio, in the asset portfolio, but also in the funding base has changed very, very much over the years.
Why did it change so much over the past few years?
No, this is very simple. Where do you find the most efficient capital? Because in the end, this is a game where you have to have scale, and we have at least some scale. We could always be bigger, but at least we have $4 billion sort of assets under management. You have to make sure that you have the lowest or most efficient operating cost. You have to have the lowest G&A costs, and I think among the panel, I think we are way, way lower than any of the others here. Per operating day effectively, and that means that there is more money left to investors.
Yeah.
Simple as that.
Yeah.
If you leave money on the table, if you have fees going here and there to management companies, it's not good for the guys who own, the hard asset in reality afterwards.
Right.
Like the investors who have invested in the fund, who again invest in your fund, for instance.
Any comments, Paolo?
Yeah, I think Ola, who I guess first of all comes from the same family as Øystein before. It's quite a interesting different views on one likes volatility versus one doesn't. But I think that's the same in all families. But clearly, the use of Google by Ola isn't quite right, because one thing we do pride ourselves on, and there's plenty of public information on it, is actually how reasonable our fees, expenses, SG&A, et cetera, are. There's public information on this. There's equity research by Jeffries and Stifel on it as well. But let's not dwell on that. But one thing that we've done as well, and there are some investors that actually we share between, or at least the European arms of the same U.S. firms that invest in ship finance are investors in our listed fund. One of the things that, of course, attracts them is a stable yield. So one thing that we've done, and so sorry, I was going to say that there are some investors in the UK who do call us mini ship finance, which I take that as a compliment, even if Ola has tried to amuse me.
Christoph.
Yeah. So no, we just as Ship Finance established this market for turning shipping cash flows, which when structured correctly, which we also follow very much in terms of having charter coverage. Ship Finance has longer charters, bigger ticket assets, more leverage. We have not slightly, but more shorter charters, up to 3 years generally, less leverage, and also a diverse portfolio. So we're actually more similar than Ola probably will admit. But we also have paid a stable and slightly growing dividend since we IPO'd in late 2017.
I know you have a target yield of 12%.
The portfolio yields 12%, but we pay a fixed quarterly dividend.
Gotcha.
Which for pension funds who have known outgoings to their beneficiaries and also to retirees and their retirement accounts, et cetera, value quite highly, which is very different from before Ship Finance, before Ocean Yield, before some others. The shipping markets were very different. And I think we should try to celebrate our successes and our similarities rather than our apparent but actually artificial differences.
I would love to take your 75 bips fee, any day.
Christoph, you have Borealis has its management operation.
Yes.
It's based in Turkey, and you're growing that. Tell us a little bit about keeping
Yep.
fees and costs low for your investors.
Yeah, so the way we are structured is that we only make money when our investors make money. And we have very low management fees, but when the investor does well, we do well. I don't get a nice bonus payment at the end of the year like Ole. So I have to sometimes wait a bit longer. But that's very much our way that we deal with our investors. We have a very strong alignment really on the profit side at the end. The other difference obviously with Ole is that Ole is a one-trick pony. So we have the ability to change our strategy as the markets change, because there are periods in time where there is much more capital to be made in an opportunistic strategy, and then there's times where actually yield strategy makes much more sense. So we're able to adapt and work with different investors. Obviously, over the years, KKR has been one of our main investors, but we deal with other investors as well, and we are also developing new strategies as we sit here. In terms of the management side, what also distinguishes us from Ole is that we have a total about 120 people in the group, of which 100 are doing ship management. So we have built up also quite a bit of ship management capabilities. We generally always have a very strong focus on the commercial side. So we always want to control the commercial element of it, and then manage the cost side, meaning either we do some in-house, but we also do with third-party managers. And Ole is probably slightly more of a financial animal than what we are. I mean, we always describe it sometimes as well that you can go on one side of the office and you ask, who do you work for? And they say, we work for a shipping company. You go to the other side of the office and you ask some other guys on the investment team, and they will tell you that they work for a hedge fund. So we're really also a combination of a hybrid of this.
Understood. Great. Let me switch a little bit to getting a good flavor for your environment. Let's switch a little bit to what's coming up. Because there are a lot of changes, and this conference, in fact, is all about change in the shipping sector, in shipping. One of your competitors, not here today, but mentioned in Posidonia that there's storm clouds on the horizon for shipping. Do you have any comments on that? Ole, what do you think?
I mean, there are always storm clouds on the horizon for shipping. I mean, if you look at it over time, shipping has always been a boom-bust type of industry. And it's typically the ship owners who's doing it to themselves. Market is good. The old rule of thumb was that when 1-year charter is sufficient to justify a new build, you go out and order as many ships as you can, possibly. Good thing now is that order book is pretty full with container ships, and the shipyard capacity is down by a third or so anyway, right? So right now it will take time to kill any segment. But of course you have, but you always have sort of changing parameters out there. So that's not really new. You have, new energy, and you have, call it, maybe you have to reduce speed a little bit, but this is more bumps on the road. It's not really a major change, I think, because there is no new technology that actually works. Yeah. It's still in, it's still to be found.
It's catching up. I mean, it really is. And let me use that a little bit to switch to another topic. What are your charterers looking for these days? I mean, we've heard about environmental pressures, the desire to use clean shipping to transport goods. Tell us a little bit about what you're doing to match up with that demand, and what kind of demand there is for green shipping. Paolo, you're experiencing some of that.
Yes. As Ola suggested, the technologies. There are some technologies that are there. I think that methanol as a fuel is reasonably well established. How we get to green methanol maybe is a different question. It's not for the ship owners, but it's for the charterers and the rest of the supply chain. But there are many things that we can do already to work with charterers to one is to continue to use the best possible technical managers. We don't do technical management ourselves. We have a stable of about 5 or 6 technical managers, picking the right ones that have the good track records, good ESG policies, which we work with them on, good crew health and safety, statistics as well, given the issues we've had with crew changes during COVID, which is a very big humanitarian issue. Clearly not as big as what's happening in the Ukraine, but we must
I'll come back to that.
I'm sure we'll come back to that, and then we will have about half of our fleet by early next year retrofitted with energy savings devices.
I know you won some awards for wind propulsion.
Yes, so we're actually, we have a single vessel that we're fitting Flettner rotors on later this year, probably in the summer. But we are working on the right packages of devices for the rest of the fleet, which save between 10 and 15%.
Are these retrofits, or these are all retrofits?
These are all retrofits, although we also have sold 10 to 15-year-old vessels that were good fuel consumers for their vintage, but because of what we think are some inefficiencies in the market today, especially in bulkers, where values of older vessels did not look as attractive as younger vessels, and also to some extent in MRs, we've been able to recycle capital from average 12-year-old ships into average 5-year-old ships and reduce fuel consumption that way by 20 to 25%. And then the ships where we're not selling or buying, but we've just had them in the portfolio, we're focusing on then the energy savings retrofits, which the charterers compensate us for through a number of different mechanisms, but today are very accretive investments given the fuel price environment that we're in.
Christoph, do you have anything to add on this? What are your charterers demanding in the way of green transportation?
But if I would say around some of the assets, I mean, some of the second-hand assets, some of the retrofits, basically when you have ships on long-term charter, you want the charterer to obviously, participate in the cost. And we have seen still, in many cases, situations where you go with the solution to the charterer, and they say, great, fantastic, please do it. And say, okay, how much are you participating? And they're actually saying, no, we're not. We've seen it in some of our offshore vessels where we have offered to put in battery packs on some of the ships, and the charterer said, great, but we're not going to pay you more. So that is a bit of a situation still. We are obviously at the end, we're there to make money for our investors, and to just do voluntary retrofits where the charterer is not willing to participate is a difficult sell. But in general, we have on the offshore side, we have actually bought some resales that we have then fitted out with battery pack prior to charter, etc. So we have dual fuel battery pack hybrid vessels now, which are probably among the top 15 vessels in the world in terms of their fuel efficiency. And that's something that we look into the offshore side. We're going to do more retrofits in terms of battery power. But on the older, or mid-age container vessels, it's not that much you can do.
Yeah. Ole, I know you look for and have some very high quality, big name charterers. What they tend to be leading, the way I see it, they're leading the pack in terms of environmental change in shipping. What are you seeing from your charterers?
Yeah, absolutely. Our portfolio, if you look at, and maybe surprise to some, and we have 90% time charters and 10% bareboat. So we do time charters. We work with P66, ConocoPhillips, the Maersks, etc. Volkswagen. So you can say, and we do long-term charters. So we are in many ways almost integrating into their value chain. So for instance, with Volkswagen, we have some existing vessels on the water where we are using sort of a biofuel sort of mix and doing various things to optimize. Then we order some dual fuel LNG new builds again. To facilitate their wish to, what we say, get into a transitional mode at least. Okay. I think personally, I don't think necessarily LNG is the solution, but at least it's a step on the road. And it
seems like a step forward to better things.
Exactly.
And the infrastructure
but ESG is sort of key. You have to be best in class. Simple as that. On the technology side, on also in terms of understanding what kind of technologies work and what doesn't, and what's fluff, because there is a lot of fluff in the market around, call it new technology and new propulsion.
Mm-hmm. Mm-hmm. Is there enough infrastructure, you think, when your new builds for your dual fuel ships come online or delivered to work with the LNG, or are you leading the technology and the infrastructure on that? Is the technology and infrastructure there now, or is it going to be there by the time the ship's delivered?
Well, I would say, if there is demand, the supply will come. The question is if it comes, the right on the day or not. But for instance, Volkswagen, they're running dual fuel, car carriers today, and they run them on LNG. Interestingly enough, when LNG is 6 times more expensive right now than normal fuel.
A lot of change in the market outside of environmental. I mean, we have a war in Ukraine, a completely different interest rate environment than a year ago. We have inflation. How are these factors influencing your investment decisions in what you do on a daily basis? Christoph, maybe you can start with that.
Yeah, you mentioned the war in Ukraine. My wife always says I shouldn't say this too loud, but we have been beneficiaries of basically of the 2 unfortunate geopolitical issues: the pandemic, which obviously resulted in a rush for consumer goods, and that was very good for the container market. And then the war in the Ukraine has obviously accelerated the question about energy security, which means more exploration, more drilling potentially for some of even the North Sea, and that obviously is driving the offshore market now for more investments and for higher pricing, otherwise, in terms of the interest rate environment, that actually is playing quite well for us in terms of our lending vehicle, because we have fixed type of returns that we want to deliver. So for us, actually, the increased LIBOR is not an issue. We actually are basically getting more competitive with our product in the market, so that is playing out quite nicely. And inflation, generally, shipping is a good asset class in an inflationary environment. So this is also something that plays strongly with investors, that it's a good asset class to invest into if you believe that there's a prolonged high inflation environment.
And why is that? Just why is inflation good for shipping?
No, it's just, obviously one is the input costs for vessels, etc. But also, if you look at the historical correlation between inflation and asset prices and shipping, there's quite a good strong correlation.
Paolo, would you agree with that? I think I saw it in the press that you did. But
well, I absolutely agree with that. Shipping as an asset class that has a very low correlation to other asset classes, especially financial asset classes, is why many of our investors have invested in shipping. So low correlation and potentially benefiting from geopolitical events, as Christoph said. Clearly, none of us wants COVID ever to happen again, a war in Ukraine ever to happen again. We all wish that these things had not happened, but we must reflect on the fact that one of the reasons shipping is attractive to investors is that in certain geopolitical or macroeconomic environments where other asset classes do not perform well, and even if they performed well in the past, shipping does perform well. Think about all the people who said that airports were the perfect asset class, because demand was very predictable and it grew, and you had a lot of pricing power. Well, I can think of one situation in the world where airports are no longer such a perfect asset class, and shipping actually has lower risk return than airports. But in terms of inflation, because shipping is a sector that does tend to perform well in inflationary times, it does mean that shipping did not perform well in much of the deflationary times that we saw 5 to 7 years ago. But when we do have high inflation, the investment thesis is working out exactly as planned, and investors respect that very much.
We were experiencing, I for one predicted that there would be a big boom I didn't predict it, I saw it. Big boom in container shipping during COVID as everyone was ordering. The economy completely changed as a result. People were working from home, they needed more goods and supplies coming from Asia. But I also predicted, probably wrongfully, that the boom would end, and it seems it hasn't. How much longer can you expect? You at Tufton and Christoph, you've sold down some of your container ship exposure, so maybe that's the way you're reaping the rewards and getting out before there's any adjustment. Ulla, your container ships are on long-term charters, so maybe you've got some isolation from that. But tell me what you see coming from in the container ship market from this, what I thought was just a plain old pandemic boom, but seems to have legs.
Yeah, absolutely. I mean, this has been a supply chain disruption issue. It hasn't really been a demand issue as such, and the growth has been relatively moderate from pre-COVID until now. So, but you know, with the box rates, you know, the liner operators have seen, that's why they could, you know, utilize the old vessels, because one, you know, they sit so long waiting to get into port anyway, so you don't really have the benefit of the better fuel consumption of the new vessels. So I think this will change in a I would say for tonnage providers with older vessels in a relatively dramatic way, you know, when the new builds start delivering in 2 or 3 years. But that aside, I mean, our focus has been on newer vessels, modern vessels, and you know, from a hedging perspective, I mean, same as you, we're relatively insulated from these market movements. We typically hedge our interest, or we can, you know, do an agreement with our charterer so they absorb it through a charter adjustment factor, for instance. So there are ways to get around that, and you know, to eliminate pieces, because it's not really our value proposition to make, you know, speculative interest rate bets for our investors or currency bets. So, for instance, you know, my very modest, you know, bonus check was in Norwegian kroners this year. You know, come to New York and it's gone, right? It's, you know. Yeah.
Gentlemen, I'm afraid we're out of time. Any final thoughts or comments for the audience?
That's fine.
Good. Well, thank you so very much for sharing your thoughts with us. It's been a pleasure. I look forward to seeing you throughout the conference, and thanks to Marine Money for putting this all together. Thank you, Mike.